Welcome to The Derivative by RCM Alternatives, where we dive into what makes alternative investments go, analyze the strategies of unique hedge fund managers, and chat with interesting guests from across the investment world.
Happy National Wine Day, everyone. Well, actually it was yesterday, but pour yourself a glass anyways because we've got a great lineup shaping up for June. I'm actually in Vegas right now at the EQD Derivatives Conference, where we'll see the likes of Ben Eifert, Jem Carson, Veneer Bonsali, Chris Cole, Ben Hunt, Chris Idio, Mike Green, and many more. It's going to be exciting 2 days. Mutiny's Jason Buck is here in Vegas as well. And the two of us are going to do a quick recap after each day and put it up as a few pod episodes next week. So tune in next week to hear what all those worth hearing in the volatility space had to say in Vegas. On to this episode, which was a fun chat with Vinovest founder Anthony Zhang. I'm not a wine guy, more of a Coors Light type, but I pressed Anthony on whether wine can really be considered an asset class if a $10 billion pension can't get meaningful exposure. But Anthony's up for the challenge as an interesting guy as you'll meet, having been paid to not go to college, started multiple businesses, and dealing with paralysis. Send it! This episode is brought to you by RCM's Managed Futures Group and their newest white paper going through all the ins and outs of trend following. Maybe trend followers will have a certain vintage of wine in their portfolios one day. And who would know which managers trade which wines? The team at RCM. That's what they do. Check out everything RCM does at www.rcmalts.com. rcmalts.com. And now back to the show.
All right. Hey, everyone. We're here with Anthony Zhang. I didn't ask you how I pronounce that last name. Did I get it?
Yeah, you got it well.
And where are you zooming in with us from today?
So I'm usually based in Los Angeles, but today I'm about an hour south in Orange County.
Oh, nice. What part?
Newport Beach.
Newport Beach. Love it. And this isn't an actual Newport Beach wine cellar behind you?
Oh, it definitely could be, though. There's a lot of nice wine cellars around this area.
I bet. You just turned 27, right?
Yeah.
So God bless you. You're making me feel old. Don't make me feel old and dumb, just old. Right. So you've started and sold 2 companies, now running a third. So kind of take us through your entrepreneurial roots, what it's like starting a company from your dorm room.
Absolutely. I always knew I wanted to start a company, but I think like most people, I was subscribed to the idea that I needed to study hard in high school, go to a good college, then study hard in college to be able to get a good job, and then maybe go to a great MBA program, and then I'd be ready to start a business. I kind of took a different route my freshman year at college. I started a side hustle, which was helping to deliver food on campus. I'd spare time in between my classes. Students are studying all the time and need food in their dorms and libraries, and I would just do those runs. And was making
What school was this?
At USC, also in LA.
Yeah.
And that just really ballooned into a marketplace where a bunch of other college students wanted a flexible, easy way to earn some extra cash, and I provided the platform for it. It was called Envoy Now, and we were able to expand that business, and I was able to eventually actually take that business full time after a couple of years to grow out to over 20 markets nationwide. We had hundreds of thousands of students using the app and delivering from it before we got acquired.
And what were the students would get a cut of the delivery fee, basically?
Yeah, so students would get the delivery fee, they get the tips. It's very similar to the DoorDash, Postmates models of today, but because you're in a college campus environment, all the restaurants were a lot closer. Enabled students to deliver faster, and also because they had their ID card, they could get access to routes and buildings that regular third party like a Postmates probably couldn't be able to. So our food was just always there on average, 8 to 10 minutes faster than Postmates. And in the world of food delivery, that's everything, right? That's the difference between a hot pizza and a cold pizza.
I missed it back in what year was that? 97, maybe. I lived in Aspen for a year after college.
Mm-hmm.
Top destination for philosophy majors. Yeah. So I worked on the mountain to get my ski pass, but then also at a company called A La Car.
Uh-huh.
And basically they would just do all this high-end Aspen restaurant delivery and they'd get 20% discount from the restaurant and upcharge the customers 20%. So I was doing that in 97. The light bulb didn't go off of like, hey, this should be a good business model for the rest of the world.
Yeah, it's definitely a problem as old as time that people are still trying to solve today.
So if you hadn't been there, I'd kind of come back to like, what year is this? This is in
This is 2013.
2013. Okay. So missed the pandemic by a bit, right? But imagine if you'd been there, right? If it had been pandemic times and the stars wouldn't have aligned, you never would have seen the need.
Yeah, there wouldn't be a college experience to even be able to start it. So timing is definitely everything here.
And so you mentioned back in high school thinking you were going to start a business, but what do you rate that first experience on skill and luck scale?
I mean, that one was, I think, just a lot of making mistakes and banging my head against the wall. Right? It's not a business that I think takes a lot of innovation and technology. Right? Food delivery is not a very technologically sort of breakthrough type of business, but it's more an execution. So it took a lot of learning about operations, learning about how to manage different parties in a marketplace, right? The restaurants want their cut, the consumers want a low price, and the delivery people want their cut too. And there needs to be something in between all of that for the business that I'm running.
Yeah.
And I'd say between skill and luck, it would probably be about 60 on the skill side, 40 on the luck side, because if I didn't get a chance to be at USC during that time, like you mentioned, to meet some early investors that believed in me, I think I would have just always thought of it as a side business and continued to run it part-time for my 4 full years of college, and instead was able to get the encouragement early on to take it full-time.
Did your own kind of social network moment there with someone said, you know what's cool? Not 5 deliveries, 5,000 deliveries. So, and I'm coming at it from like, so you knew you wanted to start a business. You knew you wanted to do that as early as what age?
I mean, probably like when I was in maybe late middle school, early high school, right? You start, I think, at that age, Facebook was blowing up. A lot of these other sort of billionaires were being minted from the internet era, that early sort of like boom of like web 2.0. And I thought it was really cool, right? I'm not 6'5" and going to be a professional athlete.
Yeah.
Right. And the other thing that I thought was really cool is being a business owner. And that was really the goal for me as soon as I started realizing that, like, all right, I'm not going to be a professional tennis player or a professional swimmer. Those were 2 of my passions growing up. But it's like, what else can I do with my life? That's really cool.
And so do you think high schoolers and even as you get to college, like that's a doable dream? Like, can you compartmentalize it and say, okay, I want to, right? Is it a repeatable process? So, okay, all these people coming into college, everyone sort of wants that dream. And then does it become like, do you get taught the right things? Do you get presented with the right opportunities? Or do you just have the drive, right? Is it a drive thing that makes it go over because not how many people come into USC every year, right? Yeah. 10,000 call it. And
yeah, a ton.
What small percentage actually ends up creating their own business?
Yeah. And a lot are in the business school too, right? There's probably a few thousand people alone in the business school, all wanting to, be in that business world and eventually start a business. And I think it's really about the drive, right? There's a million good ideas out there. Like starting a food delivery app. It's not hard. You don't need to be a genius to start it, but you need to be able to, I think, have the almost like pain tolerance to go through and make a ton of mistakes and still get up and still keep going and think that that's all right. Failure is kind of going to be more of the norm than the success part of it, right? It's a low percentage business to be in. If you're starting a business, you kind of need to look at the statistics and know that most of your businesses are going to fail.
And what do you wish you'd known then, what you know now, and wish had been taught to you either in high school or as you got to college to help you succeed there?
Oh, I think it was really about not really taught in classes, because at least in my college experience, a lot of it was around like case studies, right? And these case studies are really about companies that have made it into the billions, right?
Yeah.
It doesn't really talk about the early days and that 0 to 1 phase. And I think that is what I wish I could have been taught, because I was figuring all this stuff out on my own, right? From something very basic to be like, what is like the best way to incorporate a company? What's the best state, right? What's the best legal formation? Nobody teaches you that, right? They only talk about like, oh, when you have 500 employees, how do you talk about like employee management, right? So I think really that 0 to 1 phase is really missing. And that's why I went to a startup accelerator in Silicon Valley to learn all of that.
What was that accelerator?
It's called 500 Startups.
Got it. And so we have 1847. What's the one here in Chicago?
There's a few good ones, that are all around the world. And I think the main thing that those accelerators bring, other than just the money, is really the network, right? Like the alumni network of founders that have gone through that accelerator that you can get in touch with, as well as the investor network, right? It's a strong signal if you go through a top accelerator, because the investors know that the company and the founders are pre-vetted in a sense.
Right. And you kind of know the table stakes of how to get the basics done. So that leads me to, and you worked with Peter Thiel a little bit or had some interactions with him.
Yeah.
So what do you think about his model of like, right? Because basically you just said no college class is teaching any of this. So why not just go straight to the accelerator, learn all the startup stuff and start the business if you're smart enough? Why not skip college?
Yeah. And that's what he enabled me to do, right? He gave me the Thiel Fellowship, which gave me the sort of level of confidence in being like, hey, being a Thiel Fellow has certain benefits, gives you the ability to have certain doors open, and also the money, right? I was able to get $100,000 of a grant money from him to fund myself dropping out, figuring out what was next, which turned out to be the accelerator program, and then also fund my way through the accelerator program and being able to use the money from the accelerator to go fully into the business instead of into my living expenses.
What number of that program with you? Was that early on in the program?
That was pretty early on. I mean, the Thiel Fellowship started, I think like 11 years ago, and I was definitely one of maybe the first 5 or 6 cohorts that happened.
Yeah. And how many has he done since then?
Every single year, he picks about 20 to 25 students, high school or college. I think you have to be under 22 to be able to receive it. And the only condition is you can't be enrolled in school once you accept it. Got
it. And did you ever go back, get your degree or anything?
No, that was a tough conversation with the parents.
You're right. Like what?
When I got it, because they're like, wait, this is awesome. But, the condition about leaving college where, I was very academic in high school, was there on scholarship too. And putting all that away, I kind of positioned it more as like, hey, this is just putting it on hold, right? My credits are still there and everything else is still there. It's not like I can't come back to college at any time. So those credits are still on hold for me at USC, still to this date. But I don't think I can go back.
It's just crazy to me, right? Like other people in your shoes are taking on hundreds of thousands of debt, getting into this huge hole, and you're actually getting paid to go start the business. So it's like,
that was my thoughts exactly. I'm like, instead of spending my parents' money or being in debt, I'm actually making money to kind of get to where I want to be anyways. Yeah. And I know that's kind of industry specific with, being wanting to start a business, right? Like you can't really get without a degree in law or in med school, right? That you kind of need to go through all 4 years. But a lot of other industries, you might not.
Yeah. Which who knows? College seems to be sort of broken, right? Take on all these debt. No one can really get into the right schools they want to get into.
And it's so competitive these days. Like I have a younger brother. He's almost 7 years younger than me. And I remember just helping him through the college application process. I was like, oh my God, I don't think I would have gotten into USC like 7 years later, because everyone's got president of club ABC, everyone's got perfect scores. And You just need to do so much more to stand out these days.
Yeah, we went, my kids are younger, 13 and 10, but we went to a talk and the lady, and it's a private school here in Chicago, right? You're supposed to get into the right schools. She
Yeah.
opened the talk with, none of your kids are getting into an Ivy League school,
Oh my
right?
God.
And the parents, like, some of them might have started crying, their jaws dropped.
Oh.
Like, what? And she's just like, statistically, it's getting harder and harder. Each Ivy League school could fill their entire freshman incoming class with kids just from Shanghai.
Yeah.
Right. She was like, there's that many qualified kids around the world that could fill these classes if the schools wanted.
Yeah.
Yeah. So maybe your next venture, you can fix the college process.
Yeah.
And to me, like, then in the pandemic, you've got a $40 billion endowment and you're laying off cafeteria workers. You're doing this stuff. It's just like, what?
Yeah.
Kind of like hedge funds shrouded in academia.
Yeah.
But I digress. So, another thing, I just on the entrepreneurial side here, how do you avoid, and maybe you're too young to have come across this yet, but what I call the entrepreneurial trap, right? Of like success. Maybe the third thing, maybe the fourth thing, you get this recency bias, you get this confirmation bias, like everything I touch is gold. You plow all of your earnings from the others into this next one, and then it goes bust. Yeah. So how do you think about that at all? I've seen it in real time with my father. Sorry, Dad. Right. He took 2 companies public, one failed, tried some other companies. So he had the entrepreneurial mindset, but every third, fourth one didn't work.
Yeah. I honestly have not spent too much time thinking about that, but it is something where it's just that you're not Midas, right? Like with every single company, you do learn a lot. You can probably get from 0 to 1 or even 1 to 10 a lot faster, right? You have the employees from your previous networks that believe in you, investors that have backed your previous companies that make fundraising a lot easier. And I've certainly been able to feel those tailwinds in my third company, but it's still hard. It's still so hard. The times are different. The industry is different. And I think you just have to humble yourself and be like, I know nothing, right? And this is something where, yes, I do have some advantage with my previous companies, but it's never apples to apples, right? And I think having that learning mentality can probably help to overcome that sort of entrepreneur's trap that you mentioned.
So on to the wine, on to Vinovest.
Mm-hmm.
Pronounce it correctly?
Yeah.
So the current venture is a wine investment platform, which is why you're on this podcast. But so tell us what's going on there, how it works. Give us the elevator pitch.
Yeah. So Vinovest helps people diversify their portfolios into wine as an asset class. And traditionally, you usually think of wine collecting or wine investing as kind of a hobby for the ultra rich. And that's pretty true. Not too many people outside of serious wine collectors or people with a lot of resources can profitably collect and invest in wine. And it's very difficult to store, right? It's very difficult to also value because there's a lot of information asymmetry out there. And it's very hard to transact. Today, really, it's just through brokers, auctions, if you're not in the know. And most of the transactions are still happening offline through handshake deals. So it's really just this nebulous space where I thought, hey, you've got this really old, time-tested asset where wine's got some great fundamentals that has helped it grow and in price over the years, but it's really not something that's accessible. And especially, I think, with the boom of interest in alternatives that we've seen past 10, 15 years, this should be an option for more people who, you don't need to be a wine snob, or you don't need to be, having 10 million in net worth to be able to even get started in this thing.
And so do you view it as a tech company, as an investment company, as a beverage company? Like what lane does it swim in there?
Yeah, that's a great question. We've got, in terms of the makeup of our team, it's about a third of each, right? We've got people who are like deep into the wine industry. That's been their whole life. We've got other people who come from Wall Street and come from financial services. And then the other third is people who have built tech companies their entire life. I think at a core, though, our DNA is using technology to enable greater access. So we do consider ourselves, a tech company, but we are, tackling, an asset that can also be a beverage, and many people enjoy as well.
With valuations right now, you might want to get rid of the tech label. Go to consumer staples. We'll get into that later.
Yeah.
And so I can go on. I can browse different wines, or you can set up a portfolio for me. How does that piece of it work?
Yeah, so both options, right? Most folks offer the setup portfolio option because they don't know what to invest in, right? Or they want just a more hands-off, easy to manage experience, and we can do that for them with our managed portfolios. And then we've got our other sort of, hands-on trader type folks who want to be able to, browse the available trading pairs that we have, be able to set their own bids and offers and things, and build a more actively managed portfolio. And our marketplace allows them to do that as well. And the common thread is that we have transparent pricing. We keep all of our wine in our custody in third-party storage facilities all around the world. So that part is taken care of. And we also ensure and authenticate everything. So we really try to decrease the barrier of a lot of the things that someone would usually need before they got started, and make it as seamless as possible, where anybody on their phone could set up in 5 minutes and start trading and buying wine. And
what if I'm in full disclosure, I'm not a huge wine guy. I'm more of a Bud Light guy. But what if I want to taste the wine? I want to get the experience, right? It feels like it starts to disconnect from the investor who's like at the wine shows and right, buying the cases, the wine, storing it himself. So it takes away a lot of that hassle, but takes away some of the fun, I guess, for lack of a better word, of having the experience of wine investing.
I think for hobbyists, right, they enjoy the time it takes, right? They like going to the trade shows, or they like, kind of rummaging around for the best deal at auctions, right? And I think that type of person is still going to exist, but the people that we find are attracted most to our platform are not those people, right? They're not the wine guys, right? They're people like you who are like, hey, maybe you think it's an interesting asset class and you want to test it out to get some exposure, but you're not going to spend tens of hours at auctions or trade shows to get your favorite bottle, because you don't even know, or you don't really care, right? You're just looking for the best return, not the best tasting wine.
And are you getting pushback from those hobbyists or others who, right? Because now you have a person at the auction house, right? At those auctions, sniffing out and doing all that and buying on behalf of these other groups who might not have the same economic incentives, right? So what does that look like? You now competing with those groups?
Yeah, because we are now one of the largest wine buyers in America.
Yeah.
So we certainly do compete with those groups. And I think with any change, right, there's always pushback to like, hey, like, you're creating this new avenue where you're taking something that I used to enjoy to drink, or that I wanted to flip myself, and opening it to a larger market. So in a way, for them to buy, it becomes more difficult, but when they sell, it also becomes a lot easier, right? Because more potential buyers. Yeah. So there's always two sides of the coin, where hate it or you love it, we are just creating more participants in the market and creating also more transparency into the pricing, so that these hobbyists or collectors, they don't need to spend hours price checking 5 different sites. They can just look at our site and know that this is the more transparent global pricing.
And what did you know about wine before you started? Were you a big wine connoisseur?
I wouldn't say connoisseur. I would definitely like to drink wine. And I certainly appreciated the value of older wines, right? I always thought it was really cool that like this bottle that was, from 1980s or 1970s was still around today. And there were only, maybe 100 left in circulation, because most of it's already been consumed, right? That sort of value and appreciation over time was always really interesting to me, but I never really spent the time looking into the numbers behind it, right? I knew wine appreciates with age. I just didn't know how much until a few years ago. I was reading through a Wall Street Journal article talking about luxury assets, and top of that list was like wine, whiskey, art, luxury watches, classic cars, things like that.
I think that's the same article we wrote a negative piece on, saying, "Come on, man." But go ahead.
Yeah, and a lot of it can seem pretty inconceivable because they're like, Birkin bags have like a 30% year-over-year return, but like how many Birkin bags can you really get at scale, right? Yeah. So I totally can see the counter argument. But that's kind of where the light bulb moment happened for me, where I was like, well, this could be pretty cool to maybe track my wine collection a little bit better, because I was more just being like, all right, I'll buy 10 cases, flip 5 in the future, and hopefully I make enough profit to, to kind of subsidize my consumption. And it kind of turned out to be Vinovest.
Another skill versus luck conversation, but we'll leave them. So you see the value rises over time, but besides the fact that it has, do you have fundamental factors for why it does?
Yeah, I think a few things is, other than the supply and demand, right? There's just, you can't go back in time and make more old wine, and you can't really speed up the aging process. And then on the demand side, global consumption for wine, especially on the high end, which is usually the stuff that does have limited supply, has just been steadily increasing around 4 or 5% a year for the last 5-10 years, and is projected to also increase at similar, even heightened rates.
And most of that's Chinese millionaires, billionaires entering the space.
Yeah, it's a lot of wealthier millennials from Asia. That's where we see the fastest growing segment for consumption. The United States still remains the top consuming country of luxury wines, but I think in the next few years, it'll probably be surpassed by China.
And that demand from China is all over the world, or is mostly US? What's that split look like?
Yeah, I mean, it's right now still, still mostly US that we're seeing on our platform, at least. But I think it's going to be more globally diversified. Most people just don't even know that wine investing, as a service is actually in existence, right? Or they might even know that you can invest in wine, because it's been so, I think, so really like propped up as like a really rich person's thing to do.
Yeah. And do you have any fears, is the wrong word, but right, I'm thinking of like Robinhood and democratizing investing, and it kind of has turned out over the last year, maybe they made it too easy to invest in things that are just for sophisticated people.
Yeah, I think definitely, when you're throwing out leverage, that's when things start to get dangerous, right? And the volatility of the stock market is certainly something that there needs to be a lot more education and preparation around. I think Robinhood has tried to kind of backtrack and create more educational resources or limits before people go into that type of investing. So I do think education is a big part of making this space more accessible, right? We don't want to just make it easy, right? We can totally just make a Robinhood clone and make it almost like gambling, but we want people to know what they're investing in, why they're investing in it, both the pros and cons of the asset class and the specific region or specific winery they're investing in, and give them all that information. Of course, it's always up to the investor on if they want to consume that information or not and use it to guide their decisions, but we want to make it available. And right now it's not.
And is there any sense of leverage or anything? Can I leverage up a wine investment?
No, not today.
Not today. But, that's stage 2.
Yeah, I'm sure it'll happen in the future, right? With any market, as it gets more developed and larger professional traders and investors come in, they always want to see how they can do more of their money, right? So I think
there are wine futures, but not futures like I think of futures. But what are wine futures? Those are, I'm buying a crop before it's been harvested.
Yeah, exactly. So that's more of just like a pre-sale, right? It's not futures in the way that most people think of it. But that's also, I think, going to be interesting as well, because wine is a pretty long-term forward-looking asset class where, the harvest of right now, 2022, we're getting data on the ground with satellite data. We can be able to form a pretty good opinion on what it's going to do, but that wine won't be released until 2023, 2024. So it is an asset class that does lend well to developing the futures market around.
Let's do it. We know some people at the CME. Let's get that moving.
Yeah,
You could create the index, right?
Business happening, right? Formed right here on the podcast.
Right. You'll design the index. We get the CME to do futures on that index price, and then those producers can hedge their risk. I love it. You mentioned the satellite imagery, all that stuff. What are your thoughts? The climate change, the fires in Napa Valley, like all that stuff, for lack of a better term, does that just decrease supply? It almost makes the investment could be better, or does it threaten the long-term ability of it?
I would say it's both a threat and an opportunity, right? The threat is, of course, because of climate change and all the fires that we're seeing in a lot of key wine growing regions, it's becoming pretty tough to be able to have consistent supply. And it's also leading to consistently lower yields because, you're getting frost sometimes that's destroying the crop, or you're getting, intense heat waves that are then destroying the crop. And, with them, like they're just trying to squeeze as much juice out of the grape as possible. And even though there's more demand, they physically can't make more. And that's leading to higher prices. But it's also leading to a lot of these wineries having to search on being like, hey, is this plot of land going to be able to still produce the same quality of grapes in 10, 15 years? So that's where I think the opportunity starts arising, is that regions that previously nobody thought of as suitable for wine growing, like, northern parts of Germany or Austria or even Norway is starting to grow grapes. And a lot of the Bordeaux winemakers are actually buying up plots in Norway as kind of like, their sort of development centers to be like, hey, is this a place where I could move our operations in the next 20, 25 years? So
it's crazy. And like 20% of Norway is above the Arctic Circle, right? So
I know.
It's like, what?
It's like, oh my God. And even Canada now is making wine. And, 10, 15 years ago, Oregon was kind of put on the map with a lot of Burgundian winemakers buying up a ton of land there. So places that people didn't really think of or maybe thought was too cold to grow good wine are now becoming a potential sort of areas of development.
And what do you see in terms, right? We do a lot in the ag space in terms of helping farmers hedge their corn and soybeans and cotton, things like that. And I'm always arguing, right? Prices, you'd think the world's growing crazily. We need more food. We need more, all of that. But the technology they're putting onto those fields, right? You talked about satellite imagery. They have like robotic fertilizer and drone sprays, and right, it's just amazing. Every year they come up with new technology to increase that yield. So right, that they're always saying demand's going to be record this year, prices are going to go up. Oh, they match the demand with increased supply. So I guess is there technology like that in the wine producing, or is it kind of passe to be like, no, we don't want to overly technologize the growing of it and the producing of it because it loses a little bit of its luster?
Yeah, it's definitely the latter, because I think because of how like traditional this industry is, and because of the long aging process of these wines, a lot of them are against technology. And instead of using fertilizer or using sort of additional water sources and things like that, they're actually going back to more sustainable growing practices, going back to being organic or even biodynamic in some cases. And that's also another way to be able to have a more sustainable growing future. So we're seeing a lot of the top estates go back. Maybe there was a phase in the 90s and 2000s where they were embracing it. Now it's kind of a drawback to go back to the way how things used to be. And I think for a couple reasons is that A, they feel like that is a more sustainable future, but B, it also impacts the taste of the wine. And with consumers, I think being more and more conscious about how their food gets to the table, that's another consideration as well.
Yeah, it's super interesting, right? It's like it's a commodity, but it's not just a commodity. It has this brand and the taste, right? So you kind of have those two competing forces of like, how do we produce more of this commodity? It sounds like you're saying for the top estates, they'll just be like, well, if we don't get the yield we want, we'll just increase our price.
Exactly.
Like our brand can withhold that.
Yeah, exactly. And for most wine though, like the bulk wine, you know, especially most of the stuff that is put into, I think, the more mass produced brands, they are, to your point, embracing a lot of that technology to kind of match supply with demand. But the top estates, like a lot of these Napa Valley ones during the fires of 2020, they decided not to make wine at all. They're like, hey, the smoke touched the grapes. We're not going to compromise the brand this year. And what does that do? That actually increases the price of all their previous vintages of wines, because the consumers still want their wine. They're like, oh, we can't get a 2020. Let's buy up all the 2019 and 2018 and 2017. Yeah. So,
but that doesn't necessarily help the vineyard, right? Because they might have already sold it all. So it helps the investors, but not necessarily the vineyard.
It helps the secondary market. But a lot of vineyards, they just hold back some of their supply anyways for rainy days like that, right? They know they can inject more supply into the market whenever and kind of command whatever the secondary market price is.
So let's go back. I want to read a piece of a blog post I wrote. I think it was that same article you're mentioning. So back in 2016, wrote a blog post called Bloomberg Vomits Alternatives. Here was the paragraph. We get it. Looking at exotic property or ideas is a lot more fun to read about than, say, risk-adjusted ratios. But to compare investing in wine and fast cars to private equity and hedge funds seems a bit off the mark to us. For one, there's perhaps $1 billion worth of capacity in some of the exotic investments put up on the page, while some of the hedge funds listed manage many billions. It's not quite fair to compare the return on a $400 stamp or a $1,000 bottle of wine with the trillions invested in the hedge fund and private equity space. One is attainable to a handful of people in the world, the other to millions. Sort of like comparing the Yankees win-loss record to Phil the Power Taylor's darts record. Phil the Power Taylor, there was a link in the blog. He's like a famous English dart player, right? So he's got like some unbelievable, he's never been beaten 50 matches in a row, but like, okay, is that the same as the Yankees winning 50 games in a row? So anyway, just what are your thoughts on that? What did I get right? What did I get wrong? That was back in 2016.
Yeah, I think the main point is that it's not apples to apples, right? There's a illiquidity aspect to these alternatives that is certainly something that you can't discount. And it's a much smaller market, right? It's a market with a lot less participants. And because of that, there's both an opportunity to expand the market. It's, sometimes it's less participants because that's just how many the market can take. And in other cases, and I think for most alternatives, this does still apply, they have room to grow, but the alternative market is small because of certain limiting factors that have been put in place, right? For wine, it's like not everybody can own a wine cellar. Not everyone knew they could invest, or maybe not everybody has the 25K to drop on starting a portfolio, right? So if you decrease barriers, there can be more participants. But that's another thing is like, all right, well, if it becomes more and more liquid and there are more participants, that also invites some additional concerns of, hey, like, does there need to be additional regulation, right? How big can this market actually grow, right? And especially with something like wine, where you cannot actually put more supply into the market, even if you wanted to, there are certain limiting factors in the rate at which grows, which is, in my mind, can be a good thing, right? It means that there cannot be like insane hyper growth in an industry that could be artificially inflated. But in other ways, it's not going to be like the sexiest, like booming industry, like crypto all of a sudden, right? It's never going to be that.
Right. It's almost right. I have two thoughts. One, if I'm like, cool, let's do an ETF together and we get 5 billion in the ETF that's investing in wine, right? Is that too much? What's too much that would flood the market and overwhelm the asset class?
Yeah. So today, when we look at the wine market, if you look at all the primary sales, it's about $350 billion a year. I'd say only the top 10, 15% of it has secondary market value. So that top, $50 billion a year. So say if we wanted to create, a $5 billion ETF, it certainly would, be a pretty big factor into the market. But building up over time, or if you take, vintages from like the previous 10 years as well, and kind of blend it in, I think that would be the strategy that we would take if we were to do something like that.
Got it. And it wouldn't get so, right, you could see a future where it's, say it's a 500 billion is invested into wine, right? Some big pensions say they want to put 5-10% into it. Now it's affecting prices like at the restaurants, at the hobbyists would almost get pushed out of the business.
Yeah.
Or not out of the business, of out of the consuming it. And then do you lose the whole point of it of, right?
Yeah, because someone's got to drink it at the end of the day, right?
Someone's got to drink it to assign a value. Well, I guess that's a great question. Does someone have to drink it to assign a value to it? Like, how does it get its value? So a lot of it is old vineyards that's been tasted, has a reputation. For the new ones, how does that work? It has to get a rating or what?
Yeah, so we really do our mark to market by real time sales. So if a wine gets sold for X price, this is the price we're going to see. Or if it doesn't have recent trade prices, we look at the bid offer spread as well. So those are two ways that we do our valuation. But I think when we are looking at if wine does need to be consumed to have a value, I think that answer is yes, right? Because someone needs to have that ending utility of it for that wine to like be taken out of the supply. So that's what I really believe
in. Thinking of it needs to have a utility. My mind went to crypto. Why didn't you like tokenize this or do some sort of crypto wrapper around it?
I don't think it needs to be. That's why.
Well, that hasn't stopped the rest of the world.
yeah. There's blockchain everything now, right? And I think sure it can be useful to some, and I think it would help. The tens of millions or hundreds of millions of people who have made a ton of money in crypto over these past few years, make it easier for them to come into our market. So I do see some benefits for our business, and it's definitely not out of the question for us. But I think the core user experience, right? We are linking a sort of digital ownership certificate of wine that you're buying on our platform with something physical that is stored, in a warehouse somewhere. So that is something that if we wanted to go like full trustless, if you don't believe in Vinovest is telling you this, if you don't believe in our terms of service,
right? Have it on the chain.
Have it on the chain, right? That's for the extreme skeptic, but
to me, super refreshing to hear someone actually say out loud, it doesn't really need to be a token. It's right. It's doing what it needs to do.
I worked full time in crypto for 3 years before this, so I'm I could be, and I still am very biased in some other ways too.
So mentioning that, let's pick your brain a little bit. Did you hear SBF on the Odd Lots pod talking? He was sort of calling out crypto as a Ponzi in a nice way, which is amazing for him to hear. And then he wants the SEC to kind of bless his exchange and everything. So I think I had a question there somewhere, but where do you see the opportunities? Where do you see the risks? Why did you leave it to do this?
Yeah, I mean, I still have a lot of my personal allocations in crypto. Our company actually, or the last company I worked at, Blockfolio, actually got acquired by FTX.
Yeah.
So I'm also a shareholder there.
Did you get some meetings with Sam?
I've never met Sam in person, no, but have definitely met him at conferences and conference calls prior to that.
That's when you're big, right? When they buy your company and the founders don't ever meet. Yeah.
Yeah. I mean, this was back in, we were doing, talking that deal in late 2019 and no one knew about FTX. We're like, what? This like Hong Kong company that seems to be growing really fast, and like, boom, like, 2 years later, everyone knows about them. Right. And I think they've done an amazing job on kind of reaching that kind of consumer tipping point as well. I think for me, right, like being in crypto also exposed me to, I think, a lot of the parallels between wine and crypto, right? They're both have very, very much are lacking in user experience. Only like, only kind of like geeks or experts or someone who's very motivated can like be a user. Certainly are custody issues, both in crypto and in wine, even though one is fully digital and one is physical. And then in the early days, there was a lot of pricing and lack of transparency, right? Sam made his fortune on an arbitrage opportunity between Bitcoin prices in Korea and Japan and the US, right? And there's certainly a huge arbitrage opportunity similarly in Japan, in Korea, in all of Asia versus European prices versus American prices. So we just saw, my co-founder, I just saw a lot of parallels, and we're like, hey, this is an awesome time to start a company in this space, because we saw that sort of tailwind of alternatives. And I think crypto also helped us, because we realized that if you're crazy enough to get this many people in crypto, wine is a concept that's a lot easier to understand. We can get a lot more people into it. And I think the main reason for leaving crypto is just we both had an itch to start a company again. We've both been founders in the past, and we knew that that's always the path that we're going to go back to, right? It's great to be able to learn and build a company under another founder's vision, and I think all founders go through those phases, right? It's exhausting to build a company and then go into building another one, but that's always our path. So we knew it was going to happen sooner or later.
I want to come back to some of that founder stuff, but NFTs. So were you doing NFTs at your, what was it called again?
Blockfolio. Yeah. So we were
that predate
pricing tracking company. So we help people price their tokens on different exchanges and track them. We were there during the first NFT boom of CryptoKitties. I still own a few CryptoKitties, being like, oh my God, how are these cats worth, like this? One of my CryptoKitties was worth $50K at one point. I'm like, what in the world? But I think I never really understood the application of it, how it could help to, I think, enhance the real world until this most recent boom. Right now, people are linking NFTs to ticket sales, or NFTs to real world experiences, or NFTs to like artist royalties, or linking them to wine even, right? To me, that represents a really exciting opportunity for people to just have more transparency into who is their most engaged fan or customer.
How are they linking it to wine?
I think they're just doing it more so
like as club membership kind of thing.
Yeah, like a wine club membership. If you're an NFT holder, you get free tastings at the winery and stuff like that. And I think the cool part of that is, if you are an NFT holder of a membership, who those other like-minded people are, right? I think that's the cool thing that it's been able to really organically encourage, is that sort of community feeling, right? If you're one of the top 1,000 members, you probably want to meet other people, and you can know for sure online, like, hey, we're both like-minded. We both own the same thing, right? We have common interests, and as more and more people are spending their time online and tying their digital identity online, that is, I think, a really cool thing that it can help people do.
Yeah. What's that CryptoKitty worth now?
Only probably a few thousand. I haven't sold it. So I think that ship has sailed for me. So I'm just going to keep it as almost like a memento of like, hey, I was there during the first boom. I'll tell my grandkids.
Maybe it'll be like a fine wine one day. Like, hey, this is a vintage 2018 CryptoKitty.
Aged CryptoKitty. And then my grandkids will be like, what in the world is a CryptoKitty?
So back to being a founder, selling businesses, private equity valuations, like how are you seeing in your network and running a private company, are valuations getting hammered along with NASDAQ and tech stocks and all the publicly traded stuff? You have any insight on that?
Yeah, I think the interest rates have definitely helped to cut down the valuation multiples. Certainly getting pretty frothy, and we've seen already a lot of the pre-IPO or later stage growth stage private companies get their valuations cut. A lot more of an emphasis back to fundamentals, right? We're not valuing our company on our revenues next year, right? It's our revenues now, right? And I think that is something that investors are certainly having a lot more discipline toward, which I think for companies that have always focused on fundamentals is great, right? Now there's a less frothy playing field, and you can really make the metrics that actually matter shine. And then for a lot of other companies, you've got to start extending your runway, right? Maybe hire 50% less people and try to be creative. And I think our company, we're still relatively early stage, right? We're less than 3 years old. And I think next time we go out to fundraise later in the year, we may see some difference in investor sentiment, but it's already something that we've been preparing for, and have kind of always focused on our revenues and being good stewards over our runway as well. And
Yeah.
so I feel good about where our company is heading, despite I think a lot tougher of a funding market that's up ahead.
And you do your own venture and angel investing, right?
Yeah, I also angel invest on the side.
So what are you seeing there? What's kind of scary about the current environment for you in that
I
regard?
think in angel investments, like, I'm doing pre-seed seed stuff and sometimes Series A, there's really no difference yet in that early stage because it's still so
a lottery ticket, so to speak.
Yeah, it's really just still a lottery ticket, right? Like, you're just betting on the founder. They're really doing nothing. And it's something that we are, we're just like, okay, well, I believe, whether it's a 10 million valuation or a 15 million valuation, this is still going to be $1 billion company. So what does it really matter? Right. But when you're talking like companies that are already worth hundreds of millions, that's really going to matter because your expected return multiple is a lot less.
Moving on, you had a nice thread. I don't know how long ago it was, a couple weeks ago or months ago. Thread you put out trying to teach people how to interact with paralyzed or wheelchair bound people. For those of you listening or don't know about your accident, you were paralyzed from the neck down, correct?
Yeah. So that was had a spinal cord injury that left me a quadriplegic about, let's see, now it's been 6 years.
6 years. But you're moving your arms around now. So you've made great strides, right?
I've definitely made some good progress. I can now, independently roll my own wheelchair around and, have been able to relearn a lot of tasks that, used to be just completely subconscious to me. So, still need help with a lot of things, but that's a big thing I work toward in my personal life, is just becoming more independent and being able to get back to doing things that I love or find creative ways to learn new hobbies.
Yeah. Well, take us through what you put in that thread of what do people know? How should we be better at, what should we know about the handicapped people of the world? How should we treat them better? Yeah,
I think, the main kind of point of my thread was just that before I became paralyzed, I never even noticed people in wheelchairs, right? I didn't even know about all of the things that happen below the surface, which just looks like someone who can't move their legs, but it's so much more than that, right? There's a lot of things that you're restricted from doing, right? Just because the world is not meant to be built for people in wheelchairs, right? So I think really just thinking about accessibility, thinking about the way that you even talk or address someone. Like, a lot of times when I'm with my wife at a restaurant or checking out at a counter, like, they won't even talk to me. They'll just like look at my wife and be like, "What does he want?" type of thing. I'm like, "Hey, I'm still a real person. I can talk. I'm not brain dead, right?" So it's small things like that you just still treat them like people, like whole people, because it takes a lot more effort to even go outside into the real world again, right? A lot of people will deal with image issues, or just physically tougher to unpack your wheelchair, get in the car, then repack it, then get out, right? And just kind of noticing that, and just kind of asking for help before just like offering it. A lot of times I'll just feel somebody like behind me pushing my wheelchair. I'm like, holy crap, who the hell are you, right? Like, things like that are just like small things that I know that it's just because of the lack of experience and education that is happening. It's not people being mean, right? People are not just inherently like that. But those are, I think, sort of the few things that just to be a little bit more aware about.
Yeah. Well, hats off to you. Don't know how I would have reacted, but you just took it on, kept running the businesses, started 2 businesses since then. So hats off to you.
Yeah.
And what's the outlook look like long term?
So, I mean, spinal cord injuries, especially things that affect your nervous system, are still largely unsolved. The nerves are something that either don't regrow at all or regrow very, very slowly. And I think there are a lot of promising technologies out there. People are, Elon Musk, right? He's building Neuralink. That's the most high profile example of it. But a lot of people are building things from exoskeletons that can help you move, like an Iron Man suit, to, these neurostimulators, which really act as bridges. Because if you think of your spinal cord as like a highway, right? It's like the highway's broken right now. There's a gap in the road, so you got to build a bridge around it. If the highway is not going to repair itself, right? So there's a lot of promising studies on implants that can be put into people with my sort of injury to kind of help them relearn those neural pathways. So I think in the next 5 to 10 years, we'll have some more commercial applications for it. A lot of this stuff where we've started to see really exciting results are still in the clinical stage. And, it's only been able to impact, a few people's lives really positively to this stage.
And what are your thoughts? Have we, right? Thank God you're in this world versus 20 years ago or even 10 years ago, right? Like, is the world making progress in terms of handicap accessible and all of that, especially in California, I'm sure, here in Chicago.
Yeah. I think in the US, it's really great because we have the ADA, the Americans with Disabilities Act. That doesn't really exist anywhere else. I found that out the hard way. I've been traveling outside of the country and realized that, like, wow, right, there's either, the infrastructure was just built so long ago that it can't, be accessible, or would be really hard to be accessible, or there's just no sort of advocacy for that type of stuff. So in the US, it's definitely a lot greater. And then in other countries, I think there's still a ways to go.
All right, we're going to finish up with our what would you invest in bit. So I had two thoughts on this. Either what would you invest in just solely focused on wine, or I like that you're in some venture, and do you do some hedge funds and whatnot as well?
I have not been LPs in any sort of hedge funds before.
Got it. All right. So what would you prefer? What would you invest in broadly in the whole world, or just on the wine side?
We can do both. We'll take both.
All right. So we'll just jump into it. So you've got $1,000. Where are you putting it?
If it was just $1,000, I think I would put into very liquid stuff, right? Because I'm assuming I might need it. So probably mostly stocks or crypto right now.
Got it. So you're not a crazy crypto. You're not like 1,000, all Ethereum, all
in on the next crypto kitty.
Right.
Put in a lottery ticket.
I like this. We'll do assets first, then we'll circle back to wine. So now you go up to 100K. What are you looking at there?
100K, definitely would want some passive income stuff too. So maybe that's 10 to 20% of the portfolio, whether it be real estate or some sort of loan. Then that can kind of have a base for me to just be able to invest more on. And then I might start diversifying a little bit more, right? I think with 100,000, definitely would want to put maybe 2 to 5% into wine, something long-term that I won't be taking out for a while. And then put the rest, given that I am pretty young, I'm 27, into things that would be able to earn higher growth, like still stocks and crypto.
Okay, on to $1 million.
Ooh, $1 million. All right. I think I would go 5 to 10% long term, so wine. I would go about 20 to 30% crypto, and then I would definitely buy or have more sort of passive income opportunities. I think that, whether it be buying a business that can get me passive yield, or more into the sort of, rental property space, something like that can just almost subsidize a lot of my daily living costs. So I don't really need to focus on that. And then rest into equities.
Do you view yield farming as yield in that regard, or is it still crypto and has all the crypto risk?
Yeah, that is all the crypto risk. Because it could be one day you're getting 700%, the next day all the liquidity's gone and you're stuck with the bag, right? So
yeah,
that's something that I think requires a much more active eye. And just for me, I have done that before for a few months, and sure, it made great returns, but it also took a toll on my health. Just being able to check that so frequently. So I think at this stage in my life, I wouldn't want to do that. It's just too hands-on for me.
And now 100 million.
100 million.
Then we're done.
All right. I mean, hope to be able to get to this point one day. So
Yeah,
I think
you're on your way.
Yeah, I think a lot of it would be around like wealth preservation at this point, right? It's about, what things can I invest in that are long term for the next generation of my kids, things that would be able to yield tax benefits. And, I really don't need the rest of it that much. So like putting the rest in the things that I can just donate, donor advised funds and things like that. I think that would be like the bulk of it.
Got it. So the risk profile would come way down.
Yeah, it really would.
Which is crazy, right? When you see these guys who go from 5 to 50 billion, or Elon Musk gets cashed out on Stripe and says, all right, I'm going to do these things, right? They just have a screw of like, I'm going all in to get the next billion.
Yeah.
The next billion. All right. Now on to the wine. So $1,000 wine. What am I looking at?
Yeah, $1,000. I think, there's really no point in diversifying at that point. You just want to have a concentrated portfolio. So I would just look at a region that I believe in. Say right now, I definitely believe in Napa Valley just because of all the shortages we've been seeing, and then Champagne. So probably just like 2 nice bottles, $500 each.
And how does it work? We could ask this earlier. If I have $1,000, can I get like fractional ownership of things, or no? Or
you get the
just
entire
a bottle.
Yeah, you get the entire bottle. So we don't offer fractional shares.
Got it. That's another idea. We're going to do derivatives, options, fractional shares.
Yeah. All for more liquidity in the market. That'll help.
Yeah. All right. 100K for my wine.
Okay. Yeah. That's, we have a lot of folks like this. So I would say about 30% into Bordeaux, which is, I would say like your equivalent of like blue chip, large cap stocks. It's a very stable region that has a pretty low volatility return profile. And then I would go another 30% into Burgundy, even though it is more stable. The return profile is much higher. Last 2 years, it's been around 20% annualized. And it's much smaller quantities. So about 30K into Burgundy. And then with the rest of the 40K, it'd be pretty diversified. It'd be like, 10 to 20% into Champagne, 10 to 20% into Tuscany, and then Napa. So those would be like the 5 main areas that I would invest in.
And Champagne is part of the wine portfolio.
Yeah, we would.
Yeah.
Because it still ages, right? It's still produced the same way. Still made from grapes at the end of the day.
Right. And the $1 million
portfolio, I wouldn't really do it too differently from the 100K, except for there are just different bottles at different price points that would be really like not feasible for someone with 100K, right? There's a few bottles, even Champagne bottles or Burgundy bottles that are over $10,000 a bottle, right? I wouldn't do a 10K bottle in a 100K portfolio, but at $1 million, you could be able to reach pretty much any bottle of wine. So we would put some of those more like unicorn high price bottles in there because even though they are much more expensive, like the demand for those are, they get traded every day on the secondary.
And now 100 million. Too much?
No, not too much. I mean,
not too much.
We're managing that already. So that's something that we think that
for a single client or across the platform?
Across. Yeah. If you want to be my $100 million client, I'll gladly take that, take that order. And but yeah, I don't think it'd be very different than the $100 million strategy. But I'd also go into futures, right? So going into buying up large quantities of harvest that we do believe in, assuming this client also has a longer term trajectory. So buying a lot more futures, that'll set you up because you're pretty much just getting something that's at a guaranteed discount to when it releases.
And what's that? I was going to use Elon Musk, but he probably doesn't even have a wine cellar, right?
He has a pretty baller wine cellar.
Okay. Yeah. So what's the value of his wine cellar, do you think?
I don't think they've published that, but I think like he's got, 6,000 to 8,000 bottles. That was like during probably like last time I think I heard about his wine cellar was back in 2018. So it's probably a lot bigger now.
Right, right. But what's any idea on the value of that?
Probably like $2 to $3 million.
So that's it. So it'd be super odd for someone to have a cellar worth tens of millions of dollars.
Yeah, very like if it's like
Just
over
the
$5 million,
number of bottles would be
yeah,
insane.
you've got to be like really into wine, right? Or you're managing, other people's money, right? So
Yeah.
if you're a private collector with over 5 million, you're probably in like the top like 5% of collectors worldwide.
Got it.
Like Koch brothers, for example, I think they have like a $10 million wine cellar.
Who's that?
The Koch brothers, or one of
got
the
it.
Koch brothers.
Yeah. Awesome. That's all I got. You got any other thoughts?
No, I really enjoyed this. This was fun. So
thank you. On. I'll come visit next time I'm in Orange County then.
All right. We will
or LA.
Crack open a bottle of wine.
Yes, definitely. I know I screwed it up. I should have, when we were talking, been like, all right, send a bottle to me so we can have a bottle during the pod. Could tell me about it.
We got to do this at nighttime. This is a little too early for
exactly.
For me.
What I'll finish it with, leave me with three things, being the Bud Light guy, leave me with three things I should know about wine that I should memorize and look to lock into memory for my wine future.
For your wine future, I think
or that I can impress my wife with. Yeah.
That's a good one. That's, I think, a more practical one. I think when you're looking for wine pairings, right? I think that's something that a lot of people have probably have a lot of anxiety with when you looking at a wine list. You're at dinner, you're like, someone asks like, "Would you like any wine?" And you're like, "I have no clue how to even pronounce half of these."
Yeah.
I think always asking for the sommelier is always a great educational experience, because like those people don't get called out that often, and like they love talking about wine. So I think that's always just like a fun experience, and like they can help you spot the gems in the wine list, because every single wine list has a few wines that are not like marked up 3-4x, right? They've got a few sort of like fun gems in there. So that would be like, just find the gem in the wine list, ask the somm. They're always glad to tell you what they think is the best deal.
But aren't they paid on what they sell? Don't they have a little bit of a incentive to steer you towards the highest profitable one?
Yeah, but I feel like you could tell between like a sales somm and like someone who's really just like trying to look out for you and be a good person.
A sales somm.
Yeah.
And it used to be you never wanted to buy the cheapest one or the most expensive, and you'd go in the middle. But then someone was telling me all the restaurants know that now, so they actually make that second and third choice the highest markup.
Yeah. So that's the thing, is the markups are very inconsistent, right? And only the somm will be able to know, or unless you're, a walking wine pricing database, you don't really know which ones are being marked up the most. I think second is like when buying wine just for yourself, right? Is like just really being able to know key regions that you like, right? And based on the wines that you like, if you want to be able to explore, like just ask them like, "Hey, I really like this bottle. Last time I came to you, like what else would you recommend?" And a lot of times that can just help break you out of the funk of just buying the same wine again and again. And I think thirdly, like if you're if you're going to be more serious with it, right, just explore your options on, starting a cellar at home versus being able to have someone else manage it. Because if you ever do want to sell wine from your cellar at home, it's extremely difficult.
Yeah, they're like, how do I trust you didn't mess with this, or is it been temperature controlled? Yeah.
Yeah. So then like you get a huge discount on what your real value of the wine is. Like auctions will probably value it like 50 to 70% lower than what it could actually sell for, and you just kind of get ripped off. Whereas like we store everything in like bonded facilities. They're fully temperature controlled, climate controlled, 24/7 monitored. And that's sort of, if you take a sports card reference, that's like the PSA 10s of the world, right? Those are the ones that are like pristine condition, and everybody wants those because there's very little risk of that turning out to be a bad wine.
You gonna do sports cars next?
No, I think we'll
Sportovest.
Yeah, Sportovest. We are moving into whiskey though, so both bourbon, Japanese whiskey, and Scotch. So that's something that we've been rolling out off our wait list. We've got nearly 10,000 people on our wait list already.
Awesome. All right, looking forward to that. Now you're talking my language.
There you go.
All right, Anthony, this was fun. We'll talk to you soon.
Awesome.
Best of luck with everything.
Thanks so much.
You've been listening to The Derivative. Links from this episode will be in the episode description of this channel. Follow us on Twitter at RCMAlts and visit our website to read our blog or subscribe to our newsletter at rcmalts.com. If you liked our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear from you. This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.